Bitcoin has failed perfectly, and it never ceases to amaze me, the technical setups that we see in Bitcoin. This is going to be a nice, short and sweet, to the point Bitcoin technical analysis. This is a roadmap for me as I watch altcoins and make altcoin decisions. But the move that just happened on this Bitcoin chart is everything. And I want to talk about why, in terms of Bitcoin, in terms of this cycle, nothing has changed. I want to start with a clip from yesterday. Check this out real quick, and we will see how Bitcoin interacts with this news amidst this short-term chart, namely this resistance area right now, this trend line, 18,400. Our market's so bullish that Bitcoin. The answer, around 24 hours later, we already have the answer. Check this chart out. And the technicals never cease to amaze me. And this is in a world where I'm getting comments all the time. This time is different. This cycle is different. Bitcoin has never lived through a recession. Bitcoin has so much cushion and room to the downside right now. If this time was different, Bitcoin would already be just falling and plummeting to $10,000 or below. Bitcoin is holding strong with a ton of cushion to the downside still in this bear market. Crypto markets are holding strong in the midst of this recession that we're in. Now, this is just a perfect technical setup. You all know we've been tracking this huge triangle. It's a descending triangle. We had a little fake out. It was a busted triangle, Bitcoin falling back below the lower trend line. We've been anticipating the pullback to the trend line, and we got it pretty much off of yesterday, the Fed meeting. But here's what happened, and this is what we were eyeing up. We were obviously, from a technical perspective, eyeing up the move to the trend line. But this is what happened. Fed meeting, key interest rate may hit 5.1% in mild, hawkish surprise. Federal Reserve policymakers expect to hike their key interest rate to 5.1% next year, higher than Wall Street is counting on. So it looks like rates are going to be being raised for a little longer than many might have been anticipating. And that was not good news. And you can see even S&P 500 just not making the move that we wanted to see yesterday, which is a move breaking through this lower high resistance. These lower high Fibonacci resistance has been the story of this bear market. And right now, this most recent resistance holding true. The failsafe for S&P 500 is definitely this 50-day moving average. But going over to Bitcoin, this is what we're looking at. You all know that the 786 line, this long-term Fibonacci, is just below where Bitcoin is right now. To the downside from where Bitcoin is, as I do this video, it is 2% to the downside. That long-term Fibonacci, if you don't know, very simply is the last bear market low to the bull market high, and it's a retracement to the 786 yellow line. It's an area Bitcoin has fallen below in the previous bear cycles. It's where it's bottomed. So right now, what we were tracking yesterday was the fact that Bitcoin actually broke above that area. And right now, after resistance from this key technical area, the lower trend line of that triangle, Bitcoin has that area to kind of see if support will be there. And that's the biggest thing I will be watching right now. But what I really want to remind you all of is this. Bitcoin has broken above that 786 line in previous cycles, right? We know the last cycle, Bitcoin did not. It tested it, right? It tested the 786 multiple times. But in the previous bear market, Bitcoin did pop above very slightly at the beginning of that bear market, or at the beginning of the bottom of the bear market, and then a little stronger right here before falling back below. So right now, when we look at the Bitcoin daily chart, it's kind of a similar move. So what will be interesting to see is if there is any support here at the 786 line around 17,100. This is what I'll be watching today. It's a huge key area. But the last thing, the most important thing that I want to throw out there, everybody, because this is the biggest thing I'm reminding myself of, nothing has changed. I said it earlier in this video. There's so much cushion for Bitcoin to the downside if markets get worse before they get better. If there's one more huge capitulation in equity markets and cryptos following that, there is a ton of room to the downside. The biggest way to identify this is the fact that if you look at the 2015 bear market range, the bottom range, it was around 243 days prior to the Bitcoin halving where Bitcoin exited. Only 243 days prior. If you look at the last bear market, you can see it was 369 days prior to the halving that Bitcoin exited. And then if you look at where we are right now, we still have 517 days until the next Bitcoin halving. We still have time before the next Bitcoin halving, and we also still have a ton of downside. And when I say a ton of downside, this cushion here is around a 35% move below the 786 line, and that would be consistent with previous bear cycles. So yes, Bitcoin has failed in the short term off of resistance. It's very clear. And this is the type of technical move we see all the time, even as it kind of collides with macroeconomic news. It's amazing to see the technicals hold true. But in terms of crypto, nothing, absolutely nothing has changed. So even as I end this video, you can see Bitcoin falling slightly, now just about maybe 1.5%, just over 1.5% from the 786 line. That 786 line is the key area I'll be watching today. I hope you're doing well out there, everybody. Hit the subscribe for me. Hit that like. I'll see you in the next video. God bless.